It is the Purdue Crop Report, and the news is a mixed bag for Indiana farmers. The crops looking better than some people thought they would, but market price is certainly not looking good at all. Joining me, Chris Hurt from Purdue Extension. Chris, sort of a good news, bad news situation. Indiana crops a little bit better than a lot of us thought they were going to be. The western crops a lot better, and that has certainly took the market by surprise.
Well, it sure has, and again, I guess we have to go back and think where we were about the third week of July, wondering if we were going to have anything on some farms. So we have seen recovery from that time. These indications from the USDA for the whole state are not as devastating on yields as what we thought we might see for Indiana. That's good news. Again, it's going to be a tough year, I think, on margins, and that's what we got to think about. But we do have a little bit better yields than we had anticipated.
Certainly the market with a very sharp reaction because we came into this report pretty bullish. But again, we still have a long way to go, and there are a lot of things that can happen between now and harvest, both in the western corn belt as well as here in the east.
Well, that's right, and again, corn may be a little more locked in, as we know, when we get to near mid-August in terms of yieldability. But still, the fill on that corn can affect yields, and obviously the soybeans still have a long ways to go. We're looking a little bit on the dry side for much of the Midwest as we get into mid and later August, so I think that's a factor we'll watch closely. And secondly, acreage on soybeans. USDA reduced 850,000 acres, their harvested acreage. A lot of us think we have to go down 2.5 million acres. So if that is the case because of prevented planting and drowned out areas, that ends up being about 80 million less acres of beans, and I should say 80 million bushels less soybeans. And I think that's a factor we'll see as we get into the September and October reports. USDA probably lowering these harvested acreage even more.
We started the year thinking we would have beans in the $9 range and corn in the $3 range. We got pretty bullish with $4 corn and $10 beans. It may be an opportunity to return to our original reality of this.
Well, I think that's right. And again, if you think about how the season evolved, we largely started the year with thought, and I'm talking about May, with thought of a pretty good carryovers and then a good start, an excellent start to the crop. We had the June stocks report says, oh, maybe you don't have as much grain out there as what you thought. And then the weather second week of June really turned bad for the eastern corn belt. So I think the market probably responded as it should. It looked like we were really going to tighten inventories as we were in late June and early July. But now what the USDA says is kind of shrug your shoulders. We went through all that, and now we're back where we started. Probably a little overreaction to the downside initially after this report. I would say we'll get some recovery, but again, a lot of that will depend on what happens to yields. China's a big story and what their economy is going to be doing. Huge bean buyers for us, so a lot still to evolve, but not the prices we'd like to see for farmers.
And certainly it puts Indiana farmers in a pretty tough financial situation going forward. It's going to be a long winter, isn't it?
Well, gosh, we started the year saying this is going to be a really tight margin year to begin with a lot of those cash rent tenants already in negative category. Then you take off some yield, and especially let's think about those that may have 20% yield reductions where it's been very wet. You could easily be looking at $200 of negative margins for some of these cash rent tenants. That's going to put a lot of cash flow pressure on those producers.
Chris Hurt from Purdue.